Hello, fellow podcasters. Welcome to Aster Investment Management's podcast series. Today, Aster's CEO, Mr. Robert Stein, shares his rationale on the novel coronavirus, anticipating positive expected returns for risk assets and a high likelihood of a meaningful recovery in the short term. Mac O'Brien, our Senior Managing Director, will also be joining the discussion.
Welcome back to another edition of Aster's podcast series. This is Mac O'Brien, Managing Director at Aster. I'm with Rob Stein, CEO and founder at Aster. And today we are going to discuss a very topical issue, coronavirus.
Yep.
Yeah. So let's get right into it. As we sit here on Friday, February 28th, the major indices, take your pick, are roughly down around 15% over the past 5 trading days.
Yeah.
Rob, why the sudden market reaction? Why now?
Yeah, it's a pretty drastic one. When you talk about, pandemics and health, and it's on the regular news channels, I'm sure your wife is talking about it. The schools are emailing.
She actually tells me to stop talking about it.
Yeah, actually, that's happening as well. But sometimes that creates reaction in financial markets to events that people would be clueless to. We spoke on one of our other podcasts about the overnight market, and 9 out of 10 people don't know what was going on there, but this is something that we're seeing and hearing every day, and it's impactful when you see the CEO of, pick the company, Amazon, Apple, explain that it's going to be tough to get some parts for things. You might have to wait, or if you're traveling for vacation, or if you know somebody was on a cruise that got quarantined. There's a lot of reasons why this is hitting the investor straight on.
Because, I've been reading about this for 2.5 months, right? Not just in China. We knew there were cases that were spreading. It was almost a foregone conclusion that it was going to hit almost every major emerging and developed market. And you touched upon happening out quick supply chain, right? Because that seems to be the major catalyst this week, that companies are coming out and saying the supply chain has been disrupted. Walk me through that real quick.
Right. So lots of companies get their materials or component parts in China. And so when a big portion of the country or certain entire cities are shut down and they're not able to fulfill orders, and those orders are needed for other countries or other companies to complete their product. Mac, I love giving analogies, right? So I got one right now. You sell cakes and you need butter, eggs, and flour. And you get the eggs from China, or you get the eggs from some farm in Wisconsin. Suddenly, there's something going on there where you can't get that supply, you can't make your cake.
Yep.
And if I'm having a birthday party and I need the cake, it affects that. So that's the giant chain, and that started to be impacted early this year. And then as the virus spread, you didn't just have supply chain interruption, you had consumer interruption in countries that were quarantined or having fear amongst the people there to go out and consume. So it became two-pronged.
Yeah, because consumer sentiment came out today. No big drawback, but that was cut off on Tuesday this week. So we still don't have the most aggressive days of the market decline factored into consumer sentiment, because that is really where I think you'll see this thing either fizzle out or pick up momentum, is if the consumer starts to show significant signs of fear.
Great point. And what I find interesting is there was no concern in the markets when this virus was starting to have some fatalities. Now, I didn't want to forecast what I think or where I think, but you had to give some probability to it being a bigger deal than it was, a pandemic. And it was surprising that the markets were making new highs. Now, I could see not crashing or declining, but there is something that was over your shoulder that could happen. So when you talk about consumer sentiment, it might be that you were getting desensitized to it, and therefore they weren't impacting consumer sentiment surveys because, I heard about that 2 weeks ago and there's nothing there.
Right.
But it will be interesting to see the next round of sentiment reports.
Right, and because, at Aster, we try to do for our investors, and we seek to do, is to avoid what we refer to as wealth-destroying events.
Yeah.
Right? And the Aster Economic Index, which is our temperature gauge on the health of the U.S. economy, that's what we say is if the economy is really healthy, then any type of shock to the system, whether it's a trade war or a volatile election cycle, or in this case, potential pandemic, the ability for that to really drag the market down is really dependent on how healthy the economy is.
Right. But strength of anything is very important to the stress it takes. And so, I don't know, whether it's your staircase or your skateboard or whatever it is, you go over a bump on a skateboard that's incredibly sturdy, you're not going to put your foot through it, but let's just say, your bigger, fatter brother was on it before you were.
Yeah, right.
And then you get on it, you go over the same bump, and, you might crack it.
Right? Sounds like it may have happened to you.
David, if you're listening, I didn't mean you.
Yeah, and so the important takeaway from that is the Astor Economic Index was extremely healthy throughout 2018, entering 2019. In 2019, like we've talked about in prior podcasts, and you can check out on our website at astorim.com/charts, it has moderated. So we are dealing with a situation where the overall economic data is, again, to use your phrase, it's less good than when it was a year ago.
Right.
And so what do you think the probability of a recession is here?
You know, that's a forecasting question, and I guess any probability you put on it below 50%, you can argue you were right. I would say, based on the fact that our economic index has gone to average, and the next stop on the train is below average, we haven't been at average in a long time where the next stop would be below average. So I'd basically say the probability of a recession was very, very, very unlikely because we have to get to here. And so all I can say is that at average, it's a higher probability that we have a recession than when we're above average.
Mm-hmm. And two sides of the economy, manufacturing, which is kind of moderated, and employment, which has been incredibly resilient, very healthy. We both have our degrees in economics. You worked on the Fed. We always talk about ripple effects, right? Mm-hmm. How one thing impacts another thing and how that thing impacts the other thing. So let's go several ripples deep here, the coronavirus, and talk about what maybe could happen. Because what I'm really watching closely, as we talked about before, is consumer confidence and then employment. So when you look at the employment picture in the United States, do you think it could change drastically because of the coronavirus?
We have a blog post out. I do not think that the coronavirus will have a long-term economic impact because of the coronavirus. It seems that at some point in time, we'll get our arms around it globally. Smart people are working on it. There will eventually be, I don't want to say cure, but resources, better facilities. Like we're gonna figure it out, right? And I don't know if it's 6 months or 2 years, but the global economy is going to figure out how to address a virus that's fatality rate higher than the flu, but substantially lower than any of the last pandemics we've had. And so I'm not worried about the economic outcome. But what I am worried about, and I don't want to use a skateboard example again, but that it could be enough of a strain at a time when the economy doesn't like that could then cause an economic disruption. It won't be because of it. In fact, I'm fairly certain that pandemic won't be what kills the economy.
Right.
Pardon the insensitivity there. But it can be that the economy is getting weaker, and this is something that accelerates the weakness. Tell our clients, I don't mean to be evasive or long-winded, but it's not the economic impact of the coronavirus that concerns me. It's the strength of the economy.
As it happens, as the virus is kind of picking up steam.
Yeah, and it could be anything, right?
Yeah.
The economy gets to average, there's 20 things.
Because moving into the coronavirus, right, we all know what's happened in manufacturing, and the dip in manufacturing side of the economy is kind of stalled out. It's not getting worse.
Right.
And you still have 6.5 million open jobs, 5.5 million people looking for jobs, which is a great ratio, slightly some wage inflation. So you have a lot of positive things happening in the U.S. economy. It could be argued that until those things go bad, that we can continue to be resilient.
I would agree. I mean, jobless claims, though, are getting to a point where they could bounce the other way. Yeah, we're not forecasting, but you've been quoting it's so bad it's good or less good. I could see scenarios where it doesn't take much less good to be a concern. Again, not because of a virus, but because of when a disruption occurs with other things, with where we are.
Great. Obviously, a lot of really interesting things happening in the global economy, in the global financial markets. We will continue to update you on a weekly basis on our Friday podcast on the individual data points that we watch and that we monitor. Do us a favor, subscribe. You can listen to us as things unfolds. Give us a 5-star review if you'd be so kind. That's it for me, Rob. Anything else?
No, it's great, but I look forward to doing more of these and giving our view and analysis. Certainly happy that we had one of the lowest levels of risk and betas on our portfolios this week.
Yeah, absolutely. Thanks for listening.
Thanks, everybody.
If you have any comments or questions, you can email podcast@astorim.com, and we will do our best to get back to you as soon as possible. Be safe out there.
Have a good weekend.
To learn more about Astor Investment Management's research and strategies, please visit us on the web at www.astorim.com or stay up to date by following us on LinkedIn and Twitter. Our app is also available on the App Store and Google Play. Thank you. Astor Investment Management, LLC is a SEC registered investment advisor. All information contained herein is for informational purposes only. This is not a solicitation to offer investment advice or services at any state where to do so would be unlawful. Analysis and research are provided for informational purposes only, not for trading or investing purposes. All opinions expressed are as of the date of publication and subject to change. They are not intended as investment recommendations.